All right, back we go, doing some videos. It is Sunday, August 21st. And, nearing the end of August. I haven't done any videos in a while. I've been really busy. Try to do some more. Do pump out a lot of ETF videos tonight for swing trade ideas. The market has been going up as we look at the SPY. Look at this move. So you have the SPY. This is called a broadening wedge, or you call it a megaphone. So the space here was small when we reached our peak. Then we came down in January. Here's March. A little bit of a bounce here. Then you had a nice bounce in March all the way up to this trend line, back down, and then the June low. And then we just rocketed July and August. Now you can see the trend line here. What was the high? 480 right here. 462. That next trend line right now we're at 431 on that before it made a little move down. So what you have here is, this is a bear market bounce. Move up, down, trend line, move up, down, trend line. So the high is getting lower and the low is getting lower. Now the question is, where are we going from here? And what we'll see on that. Let's get back to UVXY, volatility index. All right, this is good to play when you're in volatility market, which we, had a lot of volatility the last year. When the market's going straight up, was it after the COVID low? A little bit of volatility, but the stock market went like straight up. It was incredible. So on this, you can see here. Now here are my points of buying. What you're looking for exactly. Right here was a low. So circle here, right here. Let's go. Here's another one. Let's map these out. You had here and here. And where's the highs? Mark it up here. Here's the trend line. And all this has to form. So you got to form a trend line. You need patterns to form. So, this is over time now, all these trend lines. All right, so what you have here, when this came down in November, where's stochastic? So I play stochastics. I play low to high. Now, it doesn't have to be exactly like that. But look at the move here. Low is, a lot of people don't, know stocks or don't understand what I'm talking about. Here's 80-20. So when you're 20 is the low, that is overbought, 80s overbought, 20s oversold. So right here is oversold, overbought. And you can see the middle line is the 50 line. Now you can stay overbought, the market when it was going up and up and not stopping since the COVID low, for that was a year and a half plus. You can stay overbought. Oversold, you can keep going down. So that's a general description of it. Now, volatilities are short-term moves. In swing trading, you're looking for a few days to, I try to get within a month. I don't like to go over a month, but anything's possible. So here's November. You had to move up, and there's your peak. So this move was like 14 to 24, 26, came back down, 12. You had to move to 22. That's a nice $10 gain. Came back, 12, another 22 move. $10 gain. You had a double bottom here. Right here is about 12, move up to 20. A smaller little move here, which is above 1268 to 18. I can see the highs getting lower on this. Descending triangle, or you can call it, a channel or a wedge. It's really big. It's not going straight down like a wedge normally is, but you can see what I'm talking about. And then we have from June going all the way down right here. And here we are now in August. Now, what do you see down here? Stochastic, it's very oversold. It's been running this like channel, like a wave back and forth under that 20. This is extremely oversold at this point. Yeah, the first candle here on Friday, the market really went down. Dow was down at 292, NASDAQ 260, S&P minus 55. Excuse me. So what are you looking for here? Every move, 1, 2, 1, 2, another one up here, and 2 up. The next move is going to be up. Now, where are we going from here? I would look for a first 10, looking for that 10 level. Got to get over 1320 EMA. And then you have, let's look down, that wick here, 1120, 1137, and 12 right here. Yeah, a lot of resistance at the 12 level, 1150, 12. And then you have a trend line. So if this does move 10, 11, 12, you could say, you go up to that 14-ish, give or take. As I move it higher, you can see 14, maybe 15. If the market really just goes down and volatility really picks up, you can see that as the high level. So short term, look for 10 to 11. Yeah, if it really gets going, high level 12 to 15 for your target. And right now your stop is going to be, see this wick right down here? 875, 871. So 875 would be your stop on this, on UVXY. As you can see it. So we've been coming down. The high is getting lower. The low, see, the low was getting lower, but it was holding that 12 line. Then we just really broke through that. So trying to form a trend line here. You have almost 2-3 touches here. We'll see if this holds going into next week. But there are my targets here. So you have a low, and we'll see if we can move up here. As you can see on stochastics, when you're this low, you will bounce. You will bounce. Just a matter of time. You don't want to put it in here. So you're in stochastics, oh, it's going to bounce. But you got to let the move play out. You got to put it all together with the market. If the market starts going up and up, this ain't going to work. You're not looking for a volatility right then until there's a sign of a change of direction in the market. All right, so that's it. So look for UVXY on these target levels and your stop, and we will see what happens next week. I think going into we're in the end of August now, September, October. I think a lot of volatility. September and October have not been good months for the market. And I see we see a reverse down again in the market. All right, that's it. Please subscribe to Mike Kim and Trade Alerts on YouTube. Smash the like button. Helps the algos. I put in links below if you want to join social media, Instagram, TikTok, Twitter, all that good stuff. That's it. Peace.